Hello and welcome to the FY 2024 application webinar for the Small Dollar Loan Program. My name is Eddie Cybulewski and I'm the program manager. Thank you so much for joining us today. I'm excited to see so many participants. The purpose of this webinar is to provide an overview of the Small Dollar Loan Program and to go over the fiscal year 2024 application components. Before we get started, I wanted to go over a few important reminders. First, this webinar is being recorded, and the presentation slides and the recording will be posted on our website probably next week. We kindly ask that you keep your cameras turned off and the lines muted during this presentation. At the end of the presentation, we will have an opportunity for questions and answers. We ask that you use the chat feature in the Zoom portal to ask questions. This is the first of two application webinars. The second application webinar will be held 2 weeks from today on November 16th, and it will be identical to this webinar. So if you're attending this webinar, you don't need to attend the one on November 16th. Last but not least, we recently recorded an AMOS application demonstration that shows applicants how to create, navigate, and submit the application in the AMOS system. So that demonstration is available on our website. You can view it at any time, and it's focused on the technical aspects of completing and submitting the application. This webinar focused more on the content and the substance of the application itself. So with that, let's jump into the presentation. Next slide, please. Welcome again to the webinar. As a reminder, please keep your lines muted and your cameras turned off. Next slide. As you can see, we have a full agenda today. First, we'll provide an overview of the SDL program staff. We'll talk about the CDFI Fund's mission and how the Small Dollar Loan Program fits within the fund's mission. Then we'll focus on the application, the Small Dollar Loan Program application and its components. And we'll discuss important reminders, provide an overview of the deadlines, as well as contact information. At the end of the presentation, we should have at least 10 minutes to answer any questions that you might have. Again, if you have any questions, please use the chat feature and we'll address all of your questions in the order that they come in. We do ask that you wait until towards the end of the presentation to ask your questions because we will cover a lot of ground and many of your questions might be answered in the presentation. Next slide, please. Okay, I'm delighted to introduce the Small Dollar Loan Program team, the small but mighty team. Again, my name is Eddie Cybulewski. I'm the program manager. I'm also joined by Julie Sandler, who's the associate program manager. Michael Fulton is the management and program analyst. And Amy Apitz is the management and program analyst. And as some of you know, this is the same team that also administers the Bank Enterprise Award Program known as the BEA program. Next slide, please. So let's talk a little bit about the CDFI Fund and its mission and how it fits in and how the Small Dollar Loan Program fits within the CDFI Fund. As most of you probably know, the CDFI Fund's mission is to expand economic opportunity for underserved people and communities by supporting the growth and capacity of a national network of community development lenders, investors, and financial service providers. Next slide, please. The Small Dollar Loan Program aligns well with the CDFI Fund's mission, and it was created to help CDFIs expand consumer access to mainstream financial institutions and to provide alternatives to high-cost small dollar loans. It was also created to assist unbanked and underbanked populations build credit, access affordable capital, and allow greater access into the mainstream financial system. And it was authorized by the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. Next slide, please. Let's talk briefly about our most recent funding round, the FY 2022 round, in which the SDL program awarded $11.4 million to 66 certified CDFIs headquartered in 23 states, the District of Columbia, Guam, and Puerto Rico. As you can see, the small dollar loan program provides grants to a variety of financial institution types. In the 22 funding round, the program provided awards to 34 credit unions, 22 loan funds, and 10 banks or bank holding companies. 17 out of the 66 recipients received $3.7 million. In other words, nearly a third of the total funds were awarded to CDFIs headquartered in persistent poverty counties, which exceeded the congressional mandate of 10%. Next slide, please. So we talked about the most recent round, the 2022 round. So let's talk about the current round, the fiscal year 2024 round, which opened on October 20th. As most of you probably know, the fiscal year 2024 small dollar loan program funding round is a double round. The funding amount will consist of $9 million from the FY23 appropriations and the FY24 appropriation, and that amount is yet to be determined. We also wanted to highlight some key substantive changes for this funding round. The first is that the minimum TA award amount increased from $10,000 to $20,000. So the lowest amount that an applicant can request for a TA award is now $20,000. The minimum total award amount increased from $30,000 to $40,000. So an applicant that is requesting loan loss reserves and technical assistance, the minimum award that can be requested is now $40,000. Another new requirement is that applicants are now required to submit the Title VI compliance worksheet. It's an online form. We will cover this requirement later on in the presentation, but we did want to emphasize that it's required, and applicants will not be able to submit their application in AMIS without submitting the Title VI compliance worksheet. Last but not least, and hopefully this is something that most applicants will appreciate, applicants are only required to attach their financial statements or call reports for the 2 most recently completed fiscal years. Previously, it was 3 years. So those are the most significant changes for the FY 2024 round. Let's go to the next slide. Okay, I'm going to turn it over to Amy to tell us a little bit more about the small dollar loan program.
Okay, thank you, Eddie. Hi, everybody. I'm glad that you could join us. The first part that I'm going to go over is the SDL program product requirements. Per the SDL program statute, the grants may only be used to support new and existing small dollar loan programs that offer loans to consumers that are made in the amount of $2,500 or less, must be repaid in installments, have no prepayment penalties, have payments that are reported to at least one of the consumer reporting agencies that compiles and maintains files on consumers on a nationwide basis, and finally are underwritten with standards that consider the consumer's ability to repay. Next slide. The eligible uses of awards. Awards may be used for loan loss reserves, or technical assistance. For loan loss reserves, they're used to cover losses on small dollar loans associated with starting a new small dollar loan program or to expand an existing small dollar loan program. For technical assistance, you can use it for technology, staff support, and other costs associated with establishing a new small dollar loan program or expanding an existing program. And those, the additional eligible cost for technical assistance, that is detailed more in the SDLP application. And as a reminder, the SDL program grants cannot be used to provide direct loans to consumers. Next slide. Some examples of past successful applicants and how they use their award. For the LLR award, it can be used to attract additional capital to increase deployment. Because of the historic loss rates that occur with small dollar lending programs, many investors will require additional reserves as much as 15%. Loan loss reserves for a small dollar loan product that can also be used that for folks who might have lack of credit history or lower than average credit scores, and you can design a product that meets those needs. For TA awards, to track the impact outcomes of its small dollar lending program by examples such as accessing credit pulls at the time the borrower applied for a loan and then 1 year later. Or you can partner with a technical service company to provide quick processing capabilities and a user-friendly interface for its small dollar lending program. Next slide. Award amounts. And Eddie went over this. He highlighted it at the beginning. The TA award amounts range this round. Minimum is $20,000. The maximum is $150,000. And for the LLR award, the amount is the range is from $20,000 and up to $350,000. And it's determined on your request and up to 20% of the applicant's 3-year projected total to be closed on balance sheet small dollar loans. For the combo award, same thing with the 20%, and the range for these are $40,000 to $500,000. Next slide. Applicant eligibility. The program statutes allow for 3 types of eligible applicants: either a certified CDFI or a partnership between a certified CDFI and any federally insured depository institution that has a primary mission to serve targeted investment areas, or it can be a partnership between 2 or more certified CDFIs. Next slide. If you're a 501(c) status, you're not able to apply if you engage in lobbying activities. And if you apply with an affiliate, an applicant must meet all eligibility requirements on its own behalf and not rely on a parent company or affiliate. An applicant that applies on behalf of another organization will be rejected without further consideration other than depository institution holding companies. Next slide. Eligible applicants will be limited to the following types of awards. For LLR grants, you must be a certified CDFI or a partnership between a certified CDFI and a FIDI with a primary mission to serve targeted investment areas. For the TA grant, you must be a certified CDFI or a partnership between 2 or more certified CDFIs. For both an LLR grant and a TA grant, you must be a certified CDFI. Next slide. And you have to pay attention to these prohibited practices when you're designing your product. Those include high rate loans, coerced automated loan payments, excessive number of refinancing, loan add-ons, for example, credit insurance, security interest in household goods, vehicles, or deposit accounts. There's an exception to that if the loan has a savings account, a component, or credit building loans. Excessive late fees or missed loan payments, abusive overdraft practices, aggressive debt collection practices, forced arbitration clause, class action bans, and other bans on legal remedies. Next slide. The program priorities. The CDF Fund will prioritize funding for applicants that propose to offer small dollar loan programs that include any of the following characteristics to address the identified community needs and any financing gaps that you might have in your community. Offer small dollar loan terms that are at least 90 days. use underwriting that considers the borrower's ability to repay a loan based on both the borrower's income and their expenses, and make loan decisions within 1 business day after receipt of required documents. Next slide. Those program priorities continue to that include offer a reduction in the borrower's loan rate if the borrower elects to use automated debit payments, offer automatic saving features that are built into the regularly scheduled payments on a loan, provided that the resulting payment is still affordable, and finally, to offer access to financial education and or credit counseling. Next slide. And Eddie highlighted this as well. The new requirement is the Title VI of the Civil Rights Act, and all SDL program applicants are required to submit Title VI compliance worksheet once annually to assist the CDFI fund in determining whether applicants are compliant with the Treasury regulation on implementing Title VI. Title VI prohibits discrimination based on race, color, or national origin in programs or activities receiving federal financial assistance from the Department of the Treasury. This requirement also applies to applicants' prospective subrecipients that are not direct beneficiaries of federal financial assistance, such as depository institution holding companies and their subsidiary depository institution. Title VI compliance worksheet is submitted via AMOS on an annual basis. The user guide for the Title VI compliant worksheet can be found by that link, and as a reminder, this will be posted. And with that, I'm going to send the presentation over to my colleague, Mike.
Thank you, Amy. So yeah, I'll start by covering a general overview of the application overview. So in this section, I'll cover a general overview of the type of questions to expect when completing this application. And also, it is important to note that if you're applying as a partnership, all questions and data supplied must only relate to the designated LEED certified CDFI. So the questions in the application will include organizational questions, and many of these questions in this section are pre-populated based on the AMOS organizational profile. And if you need to edit any of this information in these fields, please do so in your organization profile. Additional areas in this section include the award amount request, application contacts, and other questions relevant to your organization. The next section is the executive summary, which is used to summarize key elements of your new or existing small dollar loan. Then moving on to part 1, business strategy and community impact. Here you will answer questions concerning community analysis and financing gaps, proposed uses of the SDL program award, small dollar loan characteristics, lending practices, and expected impacts, description of the applicant's small dollar loan and other short-term unsecured loan products, and then also track record and projections for small dollar loans. Next slide. And then the next section is part 2, where we have questions concerning your organizational capacity. So here we'll be asking questions concerning the descriptions of key personnel, review of previous CDFI fund awards, organization's overall financial health, and lastly, analyze the compliance risk evaluation. Next slide. Okay, so completing table 1, let's discuss table 1 within the application. So here, table 1 is the section where applicants can provide information on their existing as well as any new small dollar loan products that will be supported by an SDL program award. Applicants should ensure the small dollar loan products included in table 1 meet the program standards and requirements as described in the 2024 NOFA. And for example, average small dollar loan size should be $2,500 or less, requirement of reporting to credit agencies, and the other standards and requirements that are required. When completing this table, please first identify the loan products that will be supported by the award. And if an applicant has more than 3 loan products, they should identify the loan products that are the most similar and relevant to the product that will be supported by the small dollar loan award. So next slide. Okay, so now moving on to table 2. This table is relevant only to applicants with a historic track record of providing small dollar loans. All data that's entered into table 2A is based on a 3-year historical review. So for this award, we are analyzing loans closed from 2020 to 2022. This information collected in the table should only include small dollar loans made by your organization and that meet the small dollar loan NOFA criteria. For example, again, the average loan size for the 3-year historic period must be $2,500 or less. If the average loan size exceeds this requirement, you will receive a validation error in the application, and you will not be able to complete this table or be able to submit your application. Next slide. Okay, moving on to table 2B. So table 2B should only include projected closed loans that will be supported by the 2024 program award. Our team has added data validations to ensure information is accurate and relevant to the award. If you receive one of the following validation errors, you will not be able to complete this table or again submit your application like the other table. So these validation errors include we'll start with TA only applicants. The TA only applicants have a validation error of if your average loan size for the projected 3-year period, it must be $2,500 or less. And then for loan loss reserve applicants or combo applicants, they have the same requirement, the $2,500 or less over the 3-year projected period for average loan size. The average loan loss reserve percentage for the 3-year projected period must be 20% or less of the average closed loans amount. And then the total loan loss reserve amount, the last row on the table, that must equal the loan loss reserve award requested amount in the application question 3A. So next slide. Just take a glance. Okay, here this slide is describing the application submission process. And this process includes 2 different steps. First, submitting the SF424 through grants.gov, and the second is submitting the SDL program application through AMIS. So the SF424 is a document that contains important information about your organization's tax and payment information. This document is also a requirement and starts the process for your application. And then the application, it's in AMIS, which will ask about information concerning your organization. These questions can include financial data, historical and future small dollar loan products, organizational objectives if an SDL award is received, and various other questions. And an important item to note this year, applicants are now required to submit the Title VI compliance worksheet. So please do ensure that you provide ample time to complete this document and attach it to your application. Next slide. Okay, so the application evaluation section. So the CDFI fund will evaluate applications based on several criteria. So first, the application assessment tool analysis, business strategy, and community impact review. These areas within this section will include an overall community analysis and review of financing gaps within the communities, proposed uses of the SDL award, characteristics of your organization's small dollar loan program, and review of both historical track record and projections for the applicant's small dollar loan programs. In the organizational capacity section, we'll review descriptions of key personnel, review of previous CDFI fund awards, organization's overall financial health, and lastly, analyze the compliance risk evaluation. And applicants, after all this review, will either receive a low, medium, or high risk score. And we do want to point out that applicants who receive a high risk score will not be considered for an award this year. Next slide. Let's now cover award sizing and how it's determined. So award sizes will be based on demand and several factors. These factors can include due diligence reviews by our team, review of the requested award amount, assessment of the 3-year projected total small dollar loans to be closed, and review of an applicant's headquarters location. And an important note, the SDL program is subject to a statutory 10% PPC requirement. Award sizes will be adjusted if needed to make awards to applicants that their headquarters are located in PPCs. And lastly, review of an applicant's overall risk rating. Next slide. Okay, after award sizes are determined, we can move into the assistance agreement, compliance requirements, and reporting. So applicants selected to receive an award must enter into an assistance agreement with the CDFI fund in order to become a recipient and receive payment. Additionally, these assistance agreements will have a 3-year period of performance. Terms and conditions to expect in the assistance agreements will include, but are not limited to, the award amount, approved uses of the award, performance goals and measures, or we call those PG&Ms, and reporting requirements for all recipients. Next slide. Okay, so here's some important reminders we would like to point out for the application submission process. So please submit all required documents listed in Table 2 of the SDL program application instructions. Applicants must submit their SF424 in grants.gov by November 20th, 2023. The application must be submitted in AMIS by December 20th, 2023, and applicants are only allowed to submit one application. Lastly, we encourage everyone to submit their application at least 3 days prior to the application deadline in case you run into any sort of errors or technical issues. Next slide. Okay, so on this slide, we have some important dates to remember as you're completing the application. I reviewed some of the most important dates on the previous slide, so I won't cover them all here, but this is definitely a really helpful slide for a timeline of our round. So please save this slide for your future reference. And here is our contact slide. And before passing it off to Eddie, we'd like to share all the different ways that you can get into contact with the relevant CDFI fund departments for any of your questions or concerns about your application. And this is a very helpful chart. So again, please try to save for your ease and convenience if you have any questions or concerns in the future. So with that, I will pass it over to Eddie, and thank you very much for your time.
Thank you, Mike. That was very helpful. In terms of contacting the program, I think our preferred approach is a service request. I think this ensures that we can respond to you as quickly as possible. And the only other thing I wanted to mention is regarding submitting the SF424 in grants.gov. If your organization is considering applying and you're not sure if you will submit an application, we encourage all prospective applicants to submit the SF424 by the November 20th deadline, because that will give you the opportunity to later to submit the AMIS application by the December 20th deadline. You can always submit the SF424, and then later you may decide that your organization will not apply. But if you don't submit the SF424 by November 20th, then your organization will not be able to apply. So we encourage all prospective applicants to submit the SF424. It doesn't take too long, and that ensures that you will have the opportunity to submit the AMIS application. And there's no penalty. If your organization decides that you don't want to submit the application, there's no downside basically to submitting the SF424. Okay, so with that, I see a few questions in the chat, and so I will try to address them in the order that I see them. If you have additional questions, please feel free to submit them in the chat feature, and then we'll start addressing them now. So the first question is whether a CBO 501c3 can apply. I think CBO in this context is referring to community-based organization. So one of the requirements to apply for the small dollar loan program is that your organization needs to be certified CDFI by the NOFA publication date. So that requirement is applicable for everyone. You do have to be certified as a CDFI by the NOFA publication date. And then I think a second part of that, or a subpart of that question is, if not, can we ask a CDFI to apply and subcontract to us? Unfortunately, that's not possible. The organization that is applying needs to meet all eligibility requirements on its own behalf. And then it would need to carry out the activities of the award by itself. It cannot create a sub-recipient relationship. But if you have specific questions about that, feel free to submit a service request, and then we can reach out and kind of discuss your specific circumstances. The next question is, does an applicant need 2 audited financial statements? So if you're a non-regulated financial entity, if you're a loan fund or venture capital fund, if you don't have two audited financial statements, you can submit unaudited financial statements. If you refer to Table 2 in the application instructions, it's clearly outlined there. But yeah, applicants should provide audited financial statements for the two most recently completed fiscal years, if available. If not, they can submit unaudited financial statements. Okay, the next question is, if our organization is an SDL grant recipient for 23, can we apply for 2024 with an active grant, or do we have to wait until the FY23 grant is fulfilled? That's an excellent question. Yes, if you're a previous recipient, an SDL recipient from 21 or 22 round, you are eligible to apply. You know, the key there is that you can't double count the loans for both a previous award round and the current round. There's more guidance on that in the application FAQs. And if you have additional questions, we're happy to walk you through. But again, if you're a previous SDLP recipient, there's nothing that precludes you from applying in the 2024 round. Okay, let's see. I think I addressed the question about the audits. Where's the arbitration clause? So somebody was asking a question about forced arbitration clause. So maybe we can provide a detailed response to that question after the webinar. I want to make sure legal is able to review before we respond. The next question is, where do we access the presentation slide deck? So both the slides and the recording, today's recording, will be posted to our website. If you go to step 2, apply, there's the 2 application webinars are listed there. And next week, the recording and the slides will be posted. So again, go to our website, Small Dollar Loan Program, step 2, and you'll see the 2 application webinars. And that's where you'll be able to access those materials, probably sometime next week. Who do we contact for questions about the Title VI compliance worksheet? Mike, can you go back to the contact slide? We can kind of show. Yeah, excellent. So the Office of Compliance, Monitoring, and Evaluation, it's called OCME. You can submit a service request, or you can email them, and they can provide additional guidance on that. Okay. Someone is asking, if we received a 2022 SDL award, the performance period will overlap with the 24 funding application. In the 24 application, should we reduce the SDL loan origination forecast for 2024 and 2025 by the origination goals that we've already signed performance agreements for? This is addressed in the application FAQs, but yes, when you're forecasting your goals, you need to make sure that you can meet the goals from previous SDL awards, as well as the 2024 award. So again, you can't double count the same loan for multiple funding rounds. And the application FAQs provides, I think, a very helpful table showing exactly how it's set up. Yep, this presentation will be posted on our website. Okay. Yes, so question 50 in the application FAQs. provides additional information for recipients of previous SDLP awards. So question 50. Thank you, Julie. Okay, let's see if there are any additional questions. I'm not seeing any additional questions. If you do have questions, you can submit them now. If not, you can always submit a service request or you can email us. Maybe we'll give folks another 10-15 seconds to see if there are any last minute questions. But yeah, we're happy to address questions on the call. Okay. Oh, okay. There's one question about the audits. Yeah, so if one of the audits is unaudited, that's if you're not a regulated entity and you have one audited and one unaudited financial statement, that's okay if you're not a regulated entity. And Vicky, yeah, if you have additional questions, we can follow up regarding that. Regarding your questions, we're happy to address it offline. I'm not seeing any additional questions at this time. I wanted to thank you again for attending today's presentation. We hope you found it helpful and informative. And we encourage all eligible applicants to submit their applications. Again, November 20th is the deadline to submit your SF424, and December 20th is the deadline to submit your AMIS application. So with that, thank you again so much, and we hope that you submit your application. Thank you again.